Chapter 17, we begin to work on activity-based costing. But before we get into activity-based costing or ABC costing, we're going to look at two other methods that help us to allocate overhead to our various products. So we're going to look at allocating overhead via a predetermined overhead rate, a departmental allocation, and then finally we'll get to activity-based costing. But before we get into these different methods, I first want to go over again what overhead is and what we mean by allocating overhead. So if you'll remember, we have three product costs. We have direct materials, direct labor, and we have our manufacturing overhead. If you'll remember, manufacturing overhead includes all of the costs that are not direct costs that are related to our manufacturing facility. So things that could be included in manufacturing overhead could be the manufacturing supervisor's salary, the rent on the manufacturing building, the depreciation that goes on for any of the equipment in the manufacturing building, maintenance for the manufacturing facility or for the equipment, utilities for the overall manufacturing facility, taxes for the manufacturing facility. All of these are just examples of manufacturing overhead. And all of these costs are relevant to the manufacturing process, and therefore they are relevant to the cost of the goods that we are creating. But the thing is some of these factory overhead items, we don't know exactly how much they're going to be until the end of the year or until the end of a particular period. So think about utilities. We get a utility bill for what we have used at the end of every month. So we won't know the full amount of our utility expense until the end of the year when we have all of our various utility bills. The same is true with salary. Typically you have a good idea of what a certain supervisor's salary should be, but until the year finishes out, you don't know if they're going to get maybe some special bonuses or some type of special incentives. So we have to wait until the end of the year to know the full amount of overhead. However, we begin making goods on January 1st, and that supervisor's salary is relevant to the very first piece of, or what the very first item that we make in January, and it's also relevant to the very last item that we make at the end of the year in December. So we have to find a way to allocate our overhead costs to each and every product that we make. So what we're doing is we're taking our supervisor's salary and we are going to allocate or to divide that salary up and give a little bit of that salary to each product that we make and apply that as a part of the cost of that product. The problem is, as I just mentioned, is that we don't know the exact amount of all of our factory overhead until the end of the year. But we need to be able to cost our goods that we make at the beginning of the year. So we're going to have to allocate overhead based on our best estimate of what overhead will be for the full year. So it's important to understand that when we allocate overhead, we are going to apply overhead to our products as we're manufacturing them. So we're going to apply a portion of our overall overhead to our products. But what we are applying is based on an estimate, because we need to go ahead and estimate what we think all of our overhead will be. And then when we get to the end of the year, we'll look at what did we estimate overhead to be. Once we have all of our various overhead bills and amounts finalized, we'll compare our actual overhead to what we had estimated and therefore applied. And if there's any difference between actual and what we applied, which again, what we apply is based on our estimate, we would make an adjustment for that difference. So what we're concentrating on in this lecture is this process here of allocating factory overhead to our products. So this allocation, as we apply these costs, all this is we're having to divide up what we estimate our factory overhead to be, and we will give a little piece of all of this factory overhead cost to each and every good that we make. And that little piece that we apply will become part of our product cost. So this is what we're concentrating on right now. And we're going to look at 3 different methods that are possible for applying our factory overhead. So first we're going to look at a single plant-wide overhead rate. We call this a predetermined overhead rate. Then we'll look at departmental overhead rates, and then we'll look at activity-based costing. As you move from a single plant-wide overhead rate towards activity-based costing, each of these methods gets a little bit more complex. Now the basic math is the same, but we're going to be dividing our manufacturing overhead into separate groups as we move away from using a single overhead rate towards activity-based costing. So as we get more complex, the benefit of moving towards activity-based costing is, although it is a little bit more complex, it gives us better information. And with better information, we can more properly cost our products. So let's move through these different examples, and we're going to start with using a single plant-wide overhead rate. But remember, no matter which method we're choosing, all we are doing is allocating or dividing up our manufacturing overhead and applying a little bit of our manufacturing overhead cost to each and every product that we make. So although we've got different methods, the end result is that we are trying to apply or allocate a small piece of our overhead to everything that we make. So first let's look at using the single or the plant-wide overhead rate method. What we're doing with this method is we first take all of our various indirect costs. So this is all of our manufacturing overhead for the year, and remember this is going to be based on our best estimate because we don't know exactly what it will be, but we'll estimate. And so then we have our total overhead cost. So this is going to include our rent on the building, our depreciation on our various equipment, our manager's salaries for the manufacturing department. We'd be looking at utilities for the manufacturing facility, maintenance. All of these things are going to be included in our total overhead cost. And then we have to come up with a cost allocation base. So once we have our cost, we have to figure out how is it that we are going to divide up our cost amongst our various products. And we do that by using what we call an allocation base. So an example of an allocation base might be that we will apply our costs based on the number of labor hours that each product uses. So let's say that our total overhead for the year was $100,000, and we're applying our overhead based on labor costs, and let's just make it easy, or labor hours. Let's say that we think that we will have a total of 100,000 labor hours for the year. We will apply our overhead based on how many labor hours each product uses. So we will calculate a predetermined overhead rate, which is calculated by taking our overhead cost, which in my easy example here is 100,000, divide that by our allocation base, which again, just because I'm making things easy, I'm saying that our allocation base was 100,000 labor hours. So 100,000 divided by 100,000 gives us a plant-wide overhead rate that we will allocate our overhead by giving $1 of overhead to each product for every labor hour that the product uses. So if product 1 uses 1 labor hour, 1 labor hour multiplied by $1 per labor hour, product 1 would get $1 of overhead. Let's say product 2 uses 2 labor hours. 2 labor hours multiplied by our predetermined overhead rate of $1 per labor hour would say that product 2 gets $2 of our overall overhead cost. So in the end, all we're doing is taking a small piece of our total overhead cost and finding a way to reasonably allocate those costs to our various products. So let's go ahead and work through an example here. But what we're going to be doing is we are going to be allocating this plant's overhead to their various products. And if you read through the example, we're told that we've got some information here on their overall overhead. They give us the indirect labor costs, and then they've lumped together all of the other factory utilities. So our total budgeted overhead costs are $4,800,000. Remember, this is an estimate. It's based on what we have budgeted or what we think our overhead will be in total for the year. So when we're calculating a predetermined overhead rate, this is going to be our numerator. Then, in our denominator, we need our cost driver, and this is what helps drive our allocation. We're told that in this case, our driver is going to be our labor hours. So we have to have the estimated or the budgeted labor hours in total. So in this example, we make two different products, standard and custom go-karts. We've got the number of units that we make and the various labor hours, multiply those, and we've got our total direct labor hours for each unit. And then we add those together for the total amount of estimated overhead driver. So as we move forward, we can go ahead and calculate our plant-wide overhead rate, and this is the rate that we will use in order to apply our costs. So this is where we'll put that $4.8 million and divide by our driver, which was our direct labor hours. So we've got $4.8 million divided by 100,000. And what this tells us is for every direct labor hour that a product uses, we will apply $48 worth of our overhead. So let's go ahead and see how we actually do this. You can see here for our standard go-kart, we're told that making one go-kart takes 15 direct labor hours. And then our custom go-kart uses 25 direct labor hours. Remember, our predetermined overhead rate tells us that for every one direct labor hour, we will apply $48 of our overhead. So 48 multiplied by 15 direct labor hours tells us that we will allocate $720 of total overhead to each standard go-kart. And then we do the same thing for our custom go-karts. We're using 25 direct labor hours rather than 15. And so then for every custom go-kart, we will allocate $1,200. So it's very important to remember that once we allocate or apply overhead to all of our products for the year, we will have allocated the full amount of our estimated overhead. Remember, we estimate $4.8 million. So by using this predetermined overhead, we are going to be applying a small portion of this total overhead to our products as we go along. So for every direct labor hour, we will be applying $48 worth of this overhead as we make our products. Then at the end of the year, just based on the way estimates work, we don't expect our estimate to be perfect. We may end up with actual overhead that's a little bit over or a little bit under what we had originally estimated. And when we do have an overage or if we're a little bit under, we will need to make a journal entry to account for that. We're not looking at that right now, but just keep in mind the big picture of what we're doing. All we're doing is finding a method in order to divide up this total overhead and find a reasonable way to allocate it to our products. And in this case, we have allocated based on direct labor hours. So you can see here, we can then calculate the total cost of each unit. Remember, our product costs include direct materials, direct labor, and factory overhead. We were given information for direct materials and direct labor, but we had to calculate this allocation for our overhead. So we simply take our allocation, move it down here, and if we add up all of our product costs, we get the total cost for each unit. as we move forward, we're now going to make things a little bit more specific. So rather than lumping all of our overhead into one total overhead amount and allocating that overhead based on a single driver, we're now going to divide our overhead into different departments. And then we will apply the overhead for each department as we move forward. So if you'll remember, in the previous, we had one allocation rate, and that was going to be our total overhead divided by our total driver. In this case, we're going to take our total overhead. So if we're going with the previous example, remember that total overhead was $4.8 million. And now, rather than just simply allocating this total overhead, we're first going to divide it into various departments. Then, each department will have its own allocation base or its own cost driver. And then we'll allocate our overhead based on the overhead rates for each department. So the math here is still going to be the same. Once we divide our overhead costs into our various departments, all we do is then once again calculate an overhead rate for each department and allocate our overhead based on our driver. The only difference here is now we are dividing our costs into separate departments and coming up with a driver or an allocation base for each specific department. So you can see here now, as a reminder, we have our total overhead, the same as before, was $4.8 million. Now we are going to divide that into departments. The reason we're doing this is because as we divide into different departments, we can then get more specific and look at what we think are the actual drivers for each department. It's very important to select drivers that do in fact drive your costs or drive your overhead costs. So anytime we begin dividing our overhead into various departments, or once we get into activity-based costing, rather than just dividing into various departments, we'll divide into various activities. So when we divide up these costs, we can really look at what goes on in the machining department or what goes on in the assembly department and identify what we think the best driver is for each department. Now, if you'll remember in the previous example, we only had one driver, and that driver was our direct labor hours. Now, that's not to say that direct labor hours may not be the appropriate driver. It may be a good driver to use for the machining department, or it may not be. The same goes for the assembly department. We may use direct labor hours, or we may identify another driver that we think better fits what goes on in the various departments. So the decision on what to use as a driver is a decision based on management's understanding of your various departments, or when we get into activity-based costing, management has to understand what goes on within each activity, and then they'll use their discretion to identify what the appropriate driver is. So you can see here we have now decided on our drivers, and if you'll remember, when we're coming up with an allocation rate, the overhead goes in the numerator, and then in the denominator we're going to have our driver or our allocation base. So here in the machining department, our driver or our allocation base is going to be machine hours. And this seems to make sense because the machining department is typically going to be based on, it's going to have work done by machines. Direct labor hours probably aren't going to be relevant to what actually goes on in the machining department because you're not going to be having a whole lot of direct labor here. Instead, you're having work that's done in the machine department on machines. So here we've decided that the best driver is machine hours. In the assembly department, however, we have chosen to use direct labor hours. This might be appropriate if the assembly department uses a whole lot of direct labor where you have people who are actually screwing things together and actually assembling things with their human labor versus machine labor. So here are our various drivers, And so we will need to have an understanding of the total activity of machine hours that we expect to have in the machining department. And the same, how many direct labor hours do we think we'll have? And that's how we have our allocation bases. Alright, so we've already figured out our numerator when we're calculating our departmental overhead rate. And remember, our numerator is going to be the amount of overhead for each specific department. Remember, that's when we took our $4.8 million of total overhead and decided what was applicable to the machining department and what went to the assembly department. So now our second step is to come up with the denominator in our departmental overhead rate. So we'll do that by using our cost driver, or whatever we have determined to be our allocation base. If you'll remember, for the machining department, we determined the driver to be machine hours, whereas in the assembly department, we're going to use direct labor hours. So what we need to know now are, what are the total estimated hours for machine hours and for labor hours for each of the products that we make. So you can see here for the machining department, the standard go-kart is going to use 50,000 total machine hours, and the custom is going to use 20,000. So our denominator for the machining department's departmental overhead rate is going to be this 70,000 here. We then get the information for direct labor hours, and we've got our denominator here for the assembly department. So now we can begin to calculate our two departmental overhead rates. So the math here is no different than what we were doing when we were using a single plant-wide rate. All we've done now is split into two different departments, and we're calculating an overhead rate for each of the departments. So we're going to do this by taking the total budgeted departmental overhead costs. So what portion of that original $4.8 million goes to which department, and then divide by the bases that we just got on the previous slide. So you can see here for the machining department, $4.2 million of the overall $4.8 million is related to the machining department. We're going to allocate that based on 70,000 machine hours. So this means for each single machine hour that a go-kart uses, we will apply $60 of machining department overhead. Then for the assembly department, we're allocating $600,000 of our overhead to the assembly department, and we're going to allocate that based on direct labor hours. So our denominator here is 30,000 direct labor hours. That tells us that we are going to apply overhead based on the rate of $20 per direct labor hour. So let's go ahead and see how we do this. You can see here for the machining department, we've got our departmental overhead rate, that's the $60 that we just had, and then the $20 for our assembly department, $20 per direct labor hour. Then we have our two different products. We've got our standard go-kart and our custom go-kart. So now we have to know, how many machine hours does the standard go-kart use? We know the standard go-kart uses 10 machine hours. 10 multiplied by 60 gives us $600 of overhead for the standard go-kart related to machining. Then we have to apply the overhead for the assembly department. The assembly department is a rate of $20 per direct labor hour. How many direct labor hours does the standard go-kart take? 5 direct labor hours. 20 multiplied by 5 is 100. So the total overhead for the standard go-kart is $700. We'll do the same basic process for our custom go-kart. We're still going to use the same departmental overhead rates, but they're going to be multiplied by the correct driver for the custom go-kart. So we're using 20 machine hours and 5 labor hours. So you can see here in the end we have $1,300 going to the custom go-kart. So now we've got our various information here. We're just going to compare and contrast. This is just reminding us of the overhead that we allocated to both the standard and the custom go-kart when we were using a plant-wide overhead rate. So you can see now that we've changed to a departmental overhead rate, what's going on. We can see here that the standard go-kart is being allocated a little bit less total overhead, whereas the custom go-kart is now allocated a little bit more. And that's just because when we begin to divide things into different departments and looking at what are the true drivers for these things, we get a better understanding of who or which product is actually using more of our various activities. And when we split things into departments, it looks like the custom go-kart is really using more of the resources that drive our overhead, and that's why they end up having a little bit more overhead based on the departmental overhead rate. We're now going to move into activity-based costing. In activity-based costing, again, the math is very much the same as what we were doing when we had a single plant-wide overhead rate, and then the same as when we had departmental overhead rates. The only difference is, in the previous example, we went from the plant-wide overhead rate to then the departmental rate where we had two departments, and we had to come up with an allocation rate for each of the departments. Now with activity-based costing, you can have multiple activities, and those activities are going to be treated the same way that we treated departments, meaning we have to allocate the proper amount of our total overhead to each activity, and then determine the driver for the activity, and then calculate your allocation rate for each activity. So as you see, as we move towards activity-based costing, we're getting more complex simply because as we move towards activity-based costing, we can have more and more activities, and for each activity we have to calculate that allocation rate. So let's look at how this works. Here we have our total overhead cost, and on our example that we have been working with, our total overhead cost was $4.8 million. When we were working with using a single plant-wide overhead rate, we allocated the full $4.8 million based on one driver, and that driver was our direct labor hours. Then we moved to the departmental method. And in the departmental method, we divided this overhead into two departments, and then we had a driver for each department. And when we were doing that, we had the machining department that was based on a driver of machine hours, and then we had the assembly department that was based on a driver of direct labor hours. Now with activity-based costing, you can see here we have three activity cost pools, and I'll specify exactly what I mean by a cost pool as we move forward, but here we have three cost pools. We could have 4 cost pools, we could have 5 or 6 or so on. So that's what makes activity-based costing more complex, because the more activities you have, the more complex it is to keep track of all your proper information, because you have to determine how much overhead goes to each activity or each activity cost pool. And then you have to determine what is the proper driver or what is the proper allocation base for each activity. Now, I want to mention that as we get with activity-based costing, we can have many different activities. But there is a proper balance. I've mentioned before that any time we're doing any type of accounting, there is a cost related to gathering data, and that cost cannot outweigh the benefits of the information that we get. So you can see here we've got 3 cost pools. If we add a 4th cost pool, that means there's going to be more time and money in determining what is the proper allocation base for that, and then how much of our overall overhead is going to go to that activity. So although you want activity-based costing to be useful, meaning that you have identified enough activities to make this useful, you don't want to identify so many activities that the cost of doing activity-based costing outweighs the benefit that you receive from getting this information. So we're going to define what a cost pool is as we move forward, but by using cost pools, what we're basically doing is we identify all of our activities. And then if we find any activities that are closely related, we can pool them together or lump them together. So that's one way to reduce the amount of work with activity-based costing, by lumping together similar activities into these cost pools. So let's keep moving forward. and we'll begin looking at the method for completing activity-based costing. First, we have to identify all of our various activities and their costs. So, how much overhead is related to each activity that we have identified. So, once we do that, we trace our costs to those items, and we will pull together any related activities. We'll then determine our activity rates, and we do that by coming up with our driver. That's, remember, our denominator in our allocation rates. And then step 4 is that we will assign our overhead to our various objects or the products that we make. So really all that we're doing as we move to activity-based costing from, say, departmental or even a plant-wide, the basic method is the same. All we're doing is now we're doing this for activities rather than just for departments. So let's go ahead and look here. We've got some examples of activities. And these are activities that cause us to incur manufacturing overhead. So remember, this is not our direct labor, not our direct materials. This is our manufacturing overhead. So we have machine setup, meaning getting the machines ready to run a particular batch. Maybe you have to put a certain fabric into the machines or set up some calculations that tell the machine what to do. Machine repair, this is just your basic maintenance and repair on your machines. Along with that, you could have factory maintenance, just the general upkeep. Engineer salaries. Remember, salaries are not direct labor because these engineers, they're not working on each and every project instead, or each and every product. Instead, they're designing the overall factory. So we will allocate these indirectly because it's not direct labor. Assembly line power, this is part of our utilities. Heating and lighting, again, these are utilities. So these are just examples of some of the various activities that we can find. So then we have to understand what are the costs related to these activities. And you can see here we've got some different costs. For example, machine setup is $700, machine or $700,000. Machine repair, $1,300,000, and so on. You can read through to see all the various costs related to our activities. And I just want to specify, in our examples, we are being told the costs related to each activity. But the truth is there are people whose jobs are devoted to gathering this information. So you can see why gathering all of this information can be costly. Because in our simple book examples, we're told machine setup costs us $700,000. But in truth, there's a lot of time and energy related to coming up with these dollar amounts that we're just being given here. So next you can see we can begin to set up cost pools. Because if you add here, let's see, 1, 2, 3, 4, 5, 6 different activities. But as we begin to understand these activities better, we can begin to pull them together and look at what we think are some related activities. So rather than having 6 separate activities to allocate, we can pull them together and we can reduce that number. So you can see here we've decided we end up with 4 cost pools. We have our activity cost pool related to craftsmanship, then one for setup, one for design modification, and one for plant services. So these cost pools could include just one activity or they could include multiple activities. And you can see here the information about how we have pulled together these costs. So for craftsmanship here we have just the assembly line power activity. But then for setup we have machine setup and machine repair. So the two of these activity costs will be added together. And so our total overhead cost related to setups is $2 million. We have design modification, that's just our engineer salaries. And then plant services, here we've lumped together 2 related activities for a total cost of $1 million for the plant services activity pool. We then are also told our activity drivers. And again, this information is simply given to us. But the truth is that there are people whose jobs are devoted to finding this information. Just like it's very costly to come up with the information related to the actual cost of our activities, It's also costly to come up with these drivers and then estimate what the drivers are going to be for the coming year. So again, this information is very helpful, but it's also costly because someone has to get this information. So by pooling these costs, we're reducing the number of activity drivers that we have to find, because rather than finding a driver for each specific activity, we can pull them together into things that we think are related, and then we can use those activity drivers. So you can see here our craftsmanship, we are going to be allocating that based on direct labor hours. Then we have batches. The number of batches are going to be the driver for our setups. The number of designs are what drives the design modification activity. And then finally, we're going to use square footage to be the driver for our plant services cost pool. So now we need to calculate the allocation rate for each of our 4 activity cost pools. The basic calculation is the same. We're just going to have to do it 4 times, 1 time for each cost pool. So here is how we come up with our cost pool activity rate, or our allocation rate. In the numerator, we have the total overhead costs that are assigned to whatever pool that we're currently working on, and divide that by our allocation base, which is the expected activity level for our driver that is for the pool that we're currently working on. So let's look here. For the craftsmanship activity cost pool, if you'll remember, we decided that $600,000 of our total overhead was related to craftsmanship. Divide that by the expected activity level of 30,000 batches, and you'll see here our activity rate is $20 per direct labor hour. The same thing is true for all of our other activities. We come up with our activity rate by taking the costs related to that pool, dividing it by the activity level. One thing I want to note before we move on is let's look at the setup and the design activities. If you'll see here, based on the simple dollar amount related to each of these activities, these are some of our most costly activities. And you can see here there are not many batches or a significant number of designs, 200 batches or 100 designs, that are the drivers for these costs. So what that tells us is that our setups based on batches are $10,000 per batch. Or then our designs cost us $120,000 per design. So if you think about our custom or our standard go-karts, if one of our products uses more batches or more designs than the other, they're going to end up having a significant more amount of overhead, because for every batch or every design that that specific product uses, they're going to get a significant portion of overhead related to those activities. And this is important because it really shows us that if setup and design really do use this much of our overall overhead money, then we need to make sure that we're really looking at, are we properly allocating? What we'll find as we move forward is that the custom product that we are making uses many more batches, and it uses all of our design work. If you think about something that is custom versus standard, if something is standard, we design it once and it's ready to go. If something is custom, we have to redesign it with each custom design. The same is true with batches. If something differs, we cannot run a significant number of batches. So if we're creating custom go-karts, we're going to have more batches, because if each go-kart is different, we'll need a batch for each specific type of the custom go-karts. So what we're going to find when we actually look at how many batches or how many designs are used, the custom go-karts use significantly more than the standard. So what we'll expect to find is that the custom go-karts are going to get a significant portion of these related activity costs. And so let's look at what happens. So now we need to just assign our costs to our products, and we'll use that using our activity rates. So you can see here we've got the standard go-karts here, the custom go-karts over here. So for craftsmanship, if you'll remember that those are going to be allocated based on direct labor hours. So we'll use the same activity rate of $20 per direct labor hour for each of our products, and then look at how many of the activities each consumes. So we use 25,000 direct labor hours for the standard go-karts, multiply that by $20 per direct labor hour, and that's 500,000 of this activity cost pool. We only use 5,000 direct labor hours with the custom go-karts, so multiply 5,000 by 20, and that gives us 100,000. Let's look at what happens with setups. Here, the standard go-karts, we only have 40 batches, whereas the custom, we have 160 batches. So even though we're really making fewer go-karts under the custom brand, we're having to run significantly more batches. And that's because the custom go-karts are different, so we're running more batches. The same is true with our designs. You can see here the standard go-karts, we designed them at one time and we can continue using that design. However, with the custom go-karts, we're having to constantly redesign these. So all of the activities related to design are going to be assigned to the custom go-karts. So 100% of the activities or the cost related to design is going to fall on the custom go-karts. So let's look at what happens in the end. The total overhead going to our standard go-karts is $1.5 million, whereas our custom go-karts get $3.3 million. And the reason for this is although we're making fewer go-karts, those go-karts are costing us a whole lot more because we're having to run more batches to make fewer go-karts, and we're having to redesign them. Even though we're making fewer, each one needs its own design. So you can see here we've got a much higher total overhead that's going to be allocated to those custom go-karts. So as we move forward, we can then look at what is the cost per unit. So we take the total overhead cost going to each of our various products and divide that by the number of units. So here we're making 5,000 standard go-karts, 1,000 custom go-karts, and this gives us the overhead cost per unit of $300 for the standard, $3,300 for the custom go-karts. Let's compare that to our different methods. Under the plant-wide method, the standard go-kart had 720 versus the custom go-kart had 1,200 of overhead allocated per unit. Departmental, we had a little bit of a variance, but not huge. But let's look at what happens with activity-based costing. You can see when we really understand the activities going on at our plant and we understand which product consumes more activities, we can now see that even though we're making fewer custom go-karts, these custom go-karts are much more costly because we're having to redesign them and we're having to run more batches. And so based on activity-based costing, the overhead allocated related to these custom go-karts is much higher. So the point is that I've already mentioned that activity-based costing can be costly because it is more complex, therefore it takes more time and more energy to use activity-based costing as compared to a plant-wide method. However, you can see, and as I've said, activity-based costing gives you better information. And this is just a very clear example of what better information can do. You can see here now that we have a better understanding that our standard go-kart costs us much less than the custom go-kart. And when companies have better cost information, they can make much better decisions about how they're going to move forward with their company. You can see here the cost of the standard go-kart is much less than what they were originally thinking, whereas the custom is much more expensive. Costing your products correctly is important because most companies base their price off of their costs. So if you don't have proper cost information, you cannot properly price your products and you can lose a competitive advantage. So although activity-based costing is more costly and more time-consuming, it is more helpful because it does give us better information. Finally, we're going to look at one way that you can categorize activities. And the reason that this categorization is important is because when we talk about pooling activities into various cost pools, it's important that we understand the categories that we're going to go over. So we're going to have unit level, batch level, product level, and then facility level activities. The reason that it's important to understand where a particular activity falls within these categories is because anytime you're considering pooling together your activities, you need to make sure that those activities are both within the same level. So for example, you would never want to pool together a unit level and a product level activity, or even a batch level and a product level activity. The reason why is because oftentimes activities within these different levels should have different cost drivers, and you only want to pool together activities that have the same driver. So let's actually define what these are. So first we have a unit level activity. And a unit level activity is any activity that is performed on each and every item that we make. So an example that I like to think of would be if we're a company that makes shirts. The actual sewing of the buttons onto the shirt would be a unit level activity. Let's say we're making polo shirts and we're making work-related shirts. The polo shirts have 2 buttons at the top, and then the work-related have a full button up. It doesn't matter how many buttons there are, the activity is putting buttons or sewing buttons onto those shirts. Each shirt has a button, and therefore this is a unit level activity because this is an activity performed on every single product. Next, let's move and look at a batch level activity. A batch level activity is an activity that happens or it's performed on our products in batches. So let's think of an example of this. Again, if we're making shirts, let's consider that we are making red polo shirts. Anytime we have a batch, we would be running the same product in a number of units. So let's say we're going to run 10 red polo shirts. Those red polo shirts would be a batch. So a typical activity for a batch would be the setup of the machine to run that batch. If we're running red shirts, we need to put red material into the machine. And then we can move to a new batch, and let's say we're going to make blue shirts, then we'll change, do another setup, and put blue fabric into the machine. So that's the idea of a batch level activity. It's something that we do one time to run a batch of our product. So next we have our product level activities, and these are activities that are performed on our specific product lines. So in other words, they're not affected by how many actual units we make or how many batches we run. So to give an example of what I'm talking about, I was talking about a company that makes shirts. They have their polo shirts and then they have their dress shirts. Each of those different types of shirts represents a product line. So anytime we come up with a new product, you have to have engineering and designing that backs up the creation of that product. You might also have a copyright or a trademark that backs up your specific design. So the design, engineering, or trademark type activities that are for a product line are examples of product level activities. Finally, we'll look at our facility level activities. And these are activities that sustain the facility as a whole. So they are not caused by any specific product. So it doesn't matter how many units, how many batches, or how many products we make. They cover the whole facility. So an example would be the rent on a facility. The rent is going to be the same because it sustains the entire facility. It doesn't matter how many units we make, our rent is not going to change. It's not affected. Another example of facility level cost would be the supervisor of the entire facility. They are not the supervisor over just one product. They are not the supervisor over one various manufacturing line. This is the supervisor who oversees the entire facility. So these are examples of facility level activities. And it's important to understand these activities because when we understand the different levels and examples of what drives some of the activities within those levels, it can help us when we're looking at taking our various activities and lumping them into cost pools to help get rid of some of the excess that can be created with activity-based costing.